Sound test. Okay. Okay, sound is back. Let's move on. Number 6, volume analysis around these levels. No, so we were talking about number 5, confirmation of various chart patterns enhancing trading signals. Now, in the previous session that I did, where I discussed price patterns and chart patterns, over there I had emphasized that the presence of key support and resistance levels aids a lot in identifying where the potential target can be for these chart patterns. Now, even if you're somebody who uses trading signals, the trading signals will only help you as far as entering the stock. For exiting the stock, you will need more information, which is with respect to which will be with respect to finding out your targets, and support resistance levels can be very useful in that. Now, volume analysis around these levels provides insights into the trend strength. What do I mean by this? So, when a support or resistance level is either respected or breached, always look at volume. Now, the volume analysis series will help you, session will help you in understanding this better. But when a breach or a respect happens, either ways, always look at the volumes. How did the volume behave when the supposed support resistance level was achieved or touched? That tells us a lot about what is happening in the market and what is expected to happen going forward in the market. Now, let's talk about what are the different types of support and resistance levels. So the types of support and resistance levels. So the first type of support and resistance level is the horizontal support and resistance levels. Basically, on the charts, when you draw horizontal lines to identify these levels, let me give you an example with the chart of Nifty. So here I am showing to you the chart of Nifty on my trading view, and as you can see on this 15-minute time frame, I have drawn a lot of these horizontal lines which are showing you the key support levels on the price of Nifty. And as you can see, these support levels also turn to resistance when the price approaches it from the underside. One very interesting thing about support and resistance levels is that they are fungible. What does it mean? Fungible basically means that a support will become a resistance level once the price has breached. So here you can see, and the reverse also happens. When a resistance is breached, then that level becomes support. For instance, if you see here, this was a resistance. This was a resistance. When the price went up and breached and went up, the next time it approached this level recently, this is the 19,600, it acted as a support and Nifty started to go up. And at the same time, this level of 19,750 acted as resistance first, and then some support here, again acted as resistance here, again acted as support here, again acted as resistance here, and is acting as resistance right now. So these that you're seeing, these are the horizontal support cum resistance levels. Okay, so essentially these levels or these zones are not different. They are one and the same. They are called support and resistance depending on which direction the price is approaching it from. So if resistance zone, if the price is approaching it from the below, then it becomes a resistance, right? So if the price is approaching it from this direction, from below, it becomes a resistance, right? And if the price is approaching it from the top, it becomes the support. So in order to determine whether it's a support or resistance, just see whether the price is right now at the above it or below it. Okay. Now here, as you can see, I have marked the support and resistance lines as exact levels. But what you see here, support and resistance can also be marked as zones, because when a price is moving, it is very difficult to identify exactly the point where the support or the resistance could have happened. Yeah. So the levels can, those support and resistance can also be zones instead of being just levels. So here, as you can see, these green zones that I have marked, actually let me also show you on the chart of Nifty, Infosys, sorry, because the Nifty chart is a little bit overcrowded, so you might not be able to see it very well. Now, for instance, take a look at this chart of Infosys, right? Now, on the chart of Infosys, what I can see is that this is a very important, this was price, went above the resistance, came back down to retest it, came back, went up again, and then gave, when the earning was released in the last, in this quarter, it came down sharply, and now when it goes back up, it will again experience resistance at that same level. Here again, I have cloned that zone and put it down here near this level. Now, near this level, as you can see, there is resistance right here. Now, when the price breached above this level, what you can see is, when the price breached above this level, this started acting as the support. It again acted as the support, and the price started to go back up again from that same level. So you see how support and resistance can be zones instead of exact levels. And in the stock market, it makes more sense to look at these support and resistance levels as zones rather than as levels, because if you're looking at an exact price for a reversal or a confirmation to happen, there is a high possibility that you might make an immature or a premature decision which you don't want to do, right? Again, so we've discussed that in a lot of detail. So we were talking about horizontal support and resistance, right? So these are the most common types of support and resistance levels formed when the price repeatedly stalls at a specific price level, creating a horizontal line on the chart like I just showed you. Price tends to bounce off these levels as they represent historical areas of strong supply and demand. Now, historical support and resistance levels help traders identify specific price zones where the price has historically shown interest in buying support or selling resistance. These levels are represented as flat lines on the chart, making them easy to spot or analyze. I have covered all of these things in everything that I've explained. So because I already explained before reading this, now that I'm reading this, it should make more sense for you. Now, types of support and resistance trend lines, continuing to type 2, which is trend line support and resistance. So how a trend line forms, I have already done a past session detailing on how a trend lines form, how I use trend lines, my cloning method, and so on. Again, go back to the archives and you will be able to find that video. And coming forward, I will also be doing the session again. So formed by connecting consecutive highs or lows and high, or lower highs, we can find the trend line resistance. Now, trend lines help to identify the direction of the trend and potential areas of support and resistance within the trend. Now, trend lines provide a clear visual representation of the trend direction, upward sloping trend line. So, you can read this, but the idea is that trend lines that we draw also act as key support and resistance levels. In order to see this, let's go back to the chart of Infosys. Okay. So here on this 15-minute time frame, or let's move on to the 75-minute time frame, what we can see is the trend line which has already been drawn has proved as good resistance multiple times. Now, as you can, I told you about not taking exact levels, instead taking zones. So here you can see the trend line was exactly touched here, right? It was exactly touched here, but here it exceeded a little bit. Here the trend line again lended support, but did not touch the price exactly, or the price did not touch the trend line exactly, yet the trend line was pretty valid there. Now, moving on below, we can see that when the price approached this trend line from above, it took some trepidation, some multiple attempts to breach the trend line. When it finally did, this support trend line turned to resistance trend line right here, okay? And then again it turned to resistance trend line here, and then went back down to breach the next one. In the meanwhile, it acted as a good support level. Okay. So that is about the support and resistance levels using trend lines. So next, there are also these psychological support and resistance levels. And what are these psychological levels? Usually round numbers. For instance, on Nifty, recently when the price approached the level of 20,000, it acted as a resistance. Let's quickly go back on the chart of Nifty and see how 20,000 acted as a key resistance zone and psychological level. So I'm going to draw this line and I am going to change the level of 20,000 so you can exactly see where it falls. See, this is the exact level where the 20,000 level falls, and you can see the price of Nifty just touched this level and then fell down. So this is basically where again we saw the psychological level. There's obviously no horizontal line because this is the all-time high for Nifty. So there was no historical price data to refer to in order to draw the horizontal line, and also there was no trend line available there. Yet Nifty took resistance there. Why? Because of the level of 20,000, which is a very good psychological level of or round prices level. So usually multiples of 5 rupees or 10 rupees are good psychological levels, and 100, 500, they are good psychological levels. For stocks with very low prices like single digit, for them round numbers are good psychological levels. So depending on what range of price a stock may be, the nearest round number acts as a good psychological level, like 100, 200, 400, 500, 1000, 2000 or 2500. For lower price stocks, it can be 10 rupees, 15 rupees, 20 rupees. These are good psychological levels. The last one is the pivot points. Pivot points is used very regularly by day traders. It is not a tool that I personally use, but I'm mentioning this here because a lot of day traders use. I personally don't do any day trading, so I've never used pivot points. However, from what I have heard in my interactions with other traders, it gives pretty good reliable levels, but only for day trading, not swing trading. In terms of swing trading, these pivot levels don't add a lot of value. It is better to identify your support resistance levels visually. That's my personal opinion, by the way. Now let's move on to the discussion of moving averages, and in order to segue into that discussion, it is very important to emphasize that moving averages also act as very important support and resistance levels. And these are actually the dynamic support resistance levels. Why are they dynamic? Because moving averages levels change with the change in price of the underlying instrument. Now, moving averages can be plotted in many different ways, which we are going to discuss about shortly. Now, see, these moving averages such as 50, 200, especially the key moving averages. Now, there are few key moving averages like 20 or 21, 50, 100, 200, which act as key support. The next question is moving average on which time frame, right? Because you can plot moving average on whichever time frame you want. 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, 75 minute, hourly, 1 day. So which time frame should you use? What moving average should you apply? I know it is a lot. There's a lot of iteration involved, but it's all worth it. Now, moving average such as 50-day, 200-day can act as dynamic support and resistance zones. Again, it is not a rule of thumb that if there is a moving average and it's a key level, then it will definitely act as a support or resistance. There is no such rule of thumb. There is no such hard and fast rule which compels the price to take support and resistance. At the end of the day, the price is the king. The presence of moving averages, trend lines, zones give us a good indication, put us in a position where we can have high probability setups. All we need to do is we need to know what we are going to do depending on what the market might do. See, there are ultimately 2 or 3 things that the market can do. It can either go up, it can either go down, or it can go sideways. If it goes sideways, we have to wait and watch. If it goes up, we have to revise our stop losses. If it goes down, we need to know in advance how much downside are we willing to take on our position. May it be a new position, may it be an old position, right? Okay, moving on. Now let's discuss about moving averages. But before I get into moving averages, give me a couple of minutes to quickly take a look at your comments.